Gold, XAUUSD. To some, it's the ultimate money printing machine. But to 90% of traders out there, it's a ruthless nightmare, ready to crush and blow any account in a single night. Have you ever experienced buying just to see it crash? Or selling only for it to spike, hit your stop loss, and then go your way? That's Gold's specialty: liquidity sweeps and psychological traps. Welcome back to the robergoldtrader channel. If you are still struggling in the endless loop of stop losses and blown accounts with XAUUSD, congratulations, you found the right video. Today, I won't talk about pure theory. I will dissect the entire brain, logic, and mindset behind my top 3 go-to scenarios that I confidently use to hunt gold daily. These are live trades with real money and real results. Grab a pen and paper, because what you're about to see might completely change how you view the gold chart forever. Scenario 1. The bear trap and the dragon's bounce. 15 time frame setup. Look at the context of this chart. Previously, the seller's bears created a terrifying dumping force. Red candles plummeted, breaking through minor supports. What is the crowd thinking right now? Gold is broken. Let's chase the sell. And when the crowd jumps in to short at the bottom, they officially fall into the shark's trap. Price stalls, and suddenly buyers counterattack with a series of vertical green candles, totally breaking the previous bearish structure, boss. Why did the buyers suddenly appear here? Never look at just one time frame. My secret is to switch to the 4-hour H4 time frame. On H4, we clearly see that the price area where the crowd was chasing sells is actually a massive demand zone created by buyers earlier. The sharks were just waiting for retail to sell so they could accumulate at a discount. Knowing the macro trend has turned bullish, should we FOMO buy and chase the green wave on M15? Absolutely not. The difference between pros and amateurs. Pros wait for pullbacks. Gold always has a habit of coming back to pick up passengers. I will drag the Fibonacci retracement tool from the base of the impulse wave to the top. I pay special attention to the golden ratio zone, 0.5 and 0.618. As expected, the price corrects slightly right into the Fibo 0.618 level. Coincidentally, this area perfectly confluences with an old broken peak. Resistance turns support. This is the deadly confluence point. But wait, the final factor that made me extremely confident to pull the trigger? Timing. This touch happened right during the transition between Asian and European sessions. London Open. The London session opens. Big money flows into the market. Price rejects going lower, creating a beautiful pin bar. I enter a long instantly. Stop loss safely below the structure creating low. Take profit aimed straight at the liquidity peak above. Look at the result. Gold bounced like a long compressed spring. By evening, when the US New York session kicked in, it pushed the price straight through my TP with just one candle. A flawless win by reading the exhaustion of sellers. That was a reversal scenario. What if the market is trending beautifully? Let's move to scenario 2, the King's Price Squeeze, Volatility Squeeze. Here, on the M15 XAUUSD chart, we have a textbook strong uptrend structure. Higher highs, higher lows. The steep upward slope shows buyers are completely dominating the game. However, no market goes up forever. After a strong push, the market enters a resting state. Price moves slower, candle ranges tighten, and trading volume dries up. Price is stuck in a compression triangle. Symmetrical pennant. Many people hate this sideways phase. But for me, this is a gold mine. Compression is always the prerequisite for expansion. The longer the squeeze, the more terrifying the explosion. The problem is how to avoid fakeouts. The crowd often gets hit by gold's wick sweeps before it actually flies. My secret lies in confirmation. I never buy right when the price pokes through the triangle's edge. I wait for a solid body candle, Maribozu, closing decisively outside the pattern, accompanied by a sudden spike in volume. This confirms smart money has injected funds to push the price. Boom! A beautiful breakout candle. Buy order activated immediately. I don't set my stop loss too close to avoid market noise. I set it safely just below the triangle's edge or the last squeeze low. What is the absolute advantage of a gold breakout scenario? It's speed. Once gold decides its direction after accumulation, it doesn't mess around. It'll run straight, green candle after green candle, right to your target. A seemingly simple scenario, but demands iron discipline. You must endure the boredom when it moves sideways, and be sharp and decisive the moment the confirmation signal appears. Never predict the direction. Let the market speak for itself. Finally, we come to scenario number 3, the gravitational crash. In financial markets, there's an adage: bulls go up the stairs, but bears jump out the window. Elevator? Shorting gold often brings incredibly fast profits because it's driven by fear psychology. Fear always spreads faster than greed. Let's look at this H1 timeframe picture. Gold was rising strongly before, but now the structure is broken. Sellers start rushing in to smash the price down, creating lower highs. Supply pressure continuously weighs on the market. However, buyers are still trying to defend to the death at a horizontal support below, creating equal lows. The combination of lower highs and equal lows creates the deadly descending triangle pattern. This is a life or death battle. Bulls try to defend, but bears get increasingly aggressive, pushing them against the wall. The bull's endurance is gradually exhausting. Where is my trigger point? I zoom in on the sharp corner of the triangle. I spot a micro consolidation right on the edge of the support. As soon as a massive red H1 candle with high volume pierces this small accumulation, shattering the horizontal support, I immediately enter a short order. The buyer's defensive structure has crumbled. All buyers' stop losses below this bottom will be triggered liquidity cascade. When the buyer's stop losses, which act as sell market orders, combine with the aggressive selling from sharks, it creates an avalanche effect. Gold price free falls, violently plunging straight into my take profit. Too fast, too furious. Ladies and gentlemen, technical knowledge only accounts for a very small part. Throughout the 3 recent scenarios, what is the most important thing? It's confidence and patience. There have been countless times I opened the gold chart and saw a setup that looked okay. But my gut and experience told me something was off. Maybe the previous wave wicks were too long. Maybe Fibo didn't align, or major news was coming. And my ultimate golden rule for survival is, when in doubt, absolutely do not pull the trigger. If you hesitate, your win rate has already halved in your mind. Better to regret missing a winning trade than to embrace the agony and lose money forcing a bad trade. This multi-billion-dollar gold market doesn't lack opportunities. It runs 24/5. Don't force yourself to trade every hour. Be patient like a sniper. Journal your trades. Backtest these 3 scenarios hundreds of times until they are deeply ingrained in your subconscious. When you see a setup that converges all factors, structure, Fibo, liquidity, volume, and timing, at that moment, Enter confidently with no regrets. Quality always beats quantity. I wish you success in forging iron discipline and turning XAUUSD into your own diamond mine. If you found value in this video, don't hesitate to like, share, and subscribe to the Rober channel to not miss the next top-tier live trading lessons.